A lot of new people have been getting into investing lately, and so many of them have been doing so thanks to the rise of new investing apps such as Robinhood. But are investing apps even worth it? Do they even work? Is there something smarter that you can be doing with your money? You'll get the answers to all of those questions and much more if you make sure to watch this video all the way through to the end. And if this content sounds interesting, make sure to invest in it by clicking on that like button so that YouTube knows that this video is worth it. While you're down there, please also subscribe and ring the bell if you'd like to be notified when new videos come out every Friday. They'll help you live a life you love through personal finance, investing, and self-improvement. Hi, I'm Evan, and let's start by breaking down the question, are investing apps worth it? There are a few different ways that we can interpret that question. We can ask, are investing apps worth it in terms of the opportunity cost and better ways of spending your money, by their subscription fees and costs, or by the different risks and rewards they may provide you? Let's start with the opportunity cost. This is the idea that there's a cost associated with not doing something. If you have a choice between multiple options, opportunity cost is the value of the best thing that you didn't choose. For example, if you have some spare cash laying around, you're losing out due to the opportunity cost of not investing your money. Hopefully this video can help you fix that. So we need to ask, are finance and investing apps the best options we have to grow our money, or are there better opportunities out there? The answer is, of course, it depends on the app and your circumstances. One thing that investing apps tend to overlook, and something that can be a major opportunity for you, is the lack of tax advantages. In the US, there are multiple different types of tax advantage investment accounts, which will allow you to save money on the taxes associated with investing. Generally, they let you pay less or no tax, or let you pay taxes later versus paying them right now. If you're in the target market for an app like Robinhood, which wants to attract brand new investors, you might not have or even be aware of these tax advantaged accounts. Pumping your money into stocks through Robinhood is going to have an associated opportunity cost of not making those investments within a tax advantaged account. This is going to save you a lot of money over time. However, there is a trade-off. With the most popular 401k and Roth IRA options, you're going to have to wait until you're at least 59.5 years old until you can withdraw your investment gains without penalty. With something like Robinhood, you can sell your investments anytime you want and then just cash out. Although, you will have to pay a capital gains tax. This is a tax on the increase in the value of your investment between when you bought it versus when you sold it. Depending on various factors, the early withdrawal penalties from the tax advantaged accounts may actually be in line with or even potentially less than the capital gains rate. If you'd like some more information on the Roth IRA, you can check out one of my other videos linked below. And if you'd like to hear about the best tax advantaged account that you've likely never heard of, there's another one down in the description too. To give you the quick version, the 401k allows you to contribute up to $20,500 per year of pre-tax money, which is going to grow tax-free. You'll have to pay regular income taxes when you withdraw the money. The 401k is also only available to you if offered by your employer or if you're self-employed and set one up for yourself. The Roth IRA allows you to contribute up to $6,000 worth of post-tax money, which will grow tax-free. You won't have to pay any income taxes when you go to withdraw your gains. This is one of the most popular accounts out there because anybody with earned income, that means any taxable money made, can open one. It's also popular because we expect our income and thus our tax brackets to increase over time, meaning that the Roth IRA is likely going to save you more in taxes versus the 401k. Health savings plans are available to those with high deductible insurance plans, and they allow you to contribute up to $3,650 worth of pre-tax money per year. It will grow tax-free and can be spent tax-free on qualified medical expenses. Otherwise, you pay income taxes on your withdrawals just like the 401k. So in summary, you can make up to $30,150 worth of tax advantage investments every year. If you are pumping money into investing apps without having first maxed out all of the tax advantaged accounts that are available to you, you are losing out due to the opportunity cost of missing out on these tax savings. And yes, there are some investing apps out there which do allow you to set up IRAs like Acorns. However, my issue with Acorns brings us to our next question. Are investing apps worth it in terms of their fees and associated costs? As I've talked about previously, the answer for Acorns is 100% no. To give you the short version, Acorns is going to charge you a $3 or $5 per month fee in order for you to use their service. Unless your portfolio consistently increases in value and is quite large, you're going to lose a lot of money in your portfolio value toward paying the subscription fees. To illustrate this, if we start with $100 and then invest $20 a week using Acorns roundup features, you would need to achieve a rate of return of 16.16% every year just to break even in terms of your investment gains. You will need to do nearly 2 times better than the market on average just to make a single penny in investment gains. Now, obviously, this assumes that your portfolio size and your monthly investments are somewhat small, but that is the point of Acorns, spare change after all. It also assumes that your money and your investments only go up, which is just not the case in the real world. And frankly, my assumptions are fairly accurate for Acorns and other investing apps' target user base, namely first-time or inexperienced investors. So by using Acorns, or generally using any investment app that charges a recurring fee, you're losing out on quite a bit of money in terms of both paying the subscription fee and the opportunity cost of not not just using another free service. For example, you can set up small recurring investments in your Robinhood account or even in your tax-advantaged accounts through a traditional brokerage firm. Fees in investment apps are also charged for professional management. This is essentially a cut for the people who pick out the different stocks and assets that you're investing in. If the team behind the app you're using has a long track record of consistently outperforming the stock market, paying the fees may be a worthwhile cost in order to boost your own investment performance. However, the majority of active fund managers fail to meet their performance benchmark, and then even more of them fail to beat the overall stock market. To make an example, would it be worthwhile to pay a financial advisor 1% of your portfolio or a recurring subscription fee every month for them to get you an annual return of 6% when you could save the money and get yourself 8 to 10% a year for free by just investing in an index fund which tracks the S&P 500? The answer is obviously yes. Now, while that scenario is hypothetical, it illustrates the important broad concept. It's likely easier than you think to learn about finance and investing and to make these investment choices on your own rather than paying somebody else to do it for you. Hopefully these videos are helping with that. Doing so will save you the cost of fees and potentially also boost your investment performance. This is going to save you and make you a lot more money over time. Or, of course, because it is hard to beat the market, you could just buy the market. And you can do that, as I mentioned, by purchasing an index fund which tracks the S&P 500 and then just let that ride. Although this go all in on broad market index fund strategy isn't necessarily the best idea for two reasons. First, while historically successful, it can be boring. Using investing apps can give you access to different kinds of assets than would normally be available to you within traditional brokerage accounts. Second, going all in on anything isn't the best idea due to the lack of diversification. In terms of an investment portfolio, you want to hold onto different types of assets so that the performance of your overall portfolio isn't too heavily dependent on the performance of any one single thing or any one asset class. While S&P 500 index funds will give you a lot of diversity within the stock's asset class due to giving you ownership of 505 different stocks, going all in on them is going to give you no other diversity in terms of your asset classes. And this brings us to the last question about investing apps. Are they worth it in terms of the access they give you to different risks and rewards? Using investing apps can give you access to different fun asset classes that you wouldn't normally have access to in your normal brokerage accounts. And therefore, they can help you increase your portfolio diversity. The simplest example is crypto. You're not going to be buying Bitcoin and Ethereum and Doge in your normal brokerage account. And you're most likely not going to be buying them within your tax-advantaged accounts. If you'd like to see me do a video on how you can potentially trade crypto tax-free by using an IRA, let me know. So, investing apps can give you access to new asset classes like crypto. Currently, the closest you can get within a normal brokerage account is a Bitcoin futures ETF. These track the value of contracts that lock in the price of Bitcoin to be bought at a future time. There may be a spot or a current price Bitcoin ETF coming soon, we'll see. Overall, investing apps can be worth it if you're interested in diversifying your portfolio by getting into alternative asset classes. Within the crypto space, I'm a big fan of crypto lending platforms like Celsius. I've talked about this fairly often in my videos. Essentially, these platforms will pay you to hold onto your crypto assets and to lend them out to other people. It's the same thing that banks do with cash, but with crypto, and you're also making much higher interest rates. I'm personally mostly invested in gaining interest through stablecoins. These are basically crypto dollars. I'm getting 8.5 on Celsius, though I may look to diversify by getting into other platforms like Volt. And of course, the top app for diversifying by getting into crypto is Coinbase. You can check out my Coinbase Earn video to learn about how you can make up to $50 or even more in free cryptocurrency by using Coinbase Earn. While Coinbase is not the most cost-effective way to get into cryptocurrency, it is the simplest, and some of the fees you're going to pay can be balanced out by the free crypto rewards you earn by using the app. Also within the crypto space, we have NFTs. You're definitely not buying these on your regular brokerage account. While I personally wouldn't recommend investing much into NFTs, I do own a few and will likely buy some more in the future to make content for this channel. One example is likely going to be buying VV comic book NFTs. Speaking of artwork, that's another asset class that investing apps can help you get into. Artwork is what is known as a commodity, or essentially a physical good which has value. A popular example of a commodity would be gold. If you're looking to diversify by buying some art, which has actually outperformed the stock market since 2000 based on the Art Price 100 index, that would be pretty tough to do without apps. You'd have to learn about art, buy physical pieces, store them, and then go about selling them in hopes of making a profit. With something like Yield Street, you can make set it and forget it investments into art like you can with broad market index funds. Investing apps can be very worthwhile by allowing you to more easily invest and diversify into alternative asset classes. Another way that they can be helpful is by giving you easier access to more costly investments. One example would be real estate. Now, you can invest in real estate through traditional brokerage firms such as through REITs or real estate investment trusts. These will likely get their own video in the future. However, an app like Fundrise can help you get into real estate investing without having to do too much research on which REITs are right for you, though there are going to be limitations based on on your minimum investment. I'll eventually put some money in, test it out, and let you know about my experience in a future video. With that, make sure to put some likes into this video, ring out that bell button, and stay tuned for future uploads. Do you think investing apps are worth it? Which ones do you use? Which one should I check out to make videos for in the future? Let me know. Comment down below. Click the video on screen to watch another that you're going to enjoy, and then please add some music, some finance apps, or whatever else it is that you love to your day.